Hey guys, it is August the 26th, and we are at Friday again, which is kind of crazy. The market has decided to really just kind of, I think, it's just decided to be a little crazy today, for lack of a better way to say it. Past performance is not indicative of future returns. I'm going to share my screen. Here's what the indices look at 1 o'clock today, all red, which is crazy. But oddly enough, the names that really have gotten clobbered, they're not down quite the same way. The names that we've been very positive on that just haven't, you've really got energy starting to have very specific spots where you're just seeing like kind of more of a mix. Oddly enough, hold on, this is the 3-month performance. No wonder this looks so strange. Most of the screen is red today. There's a little bit of a give back, but the give back is very much so oriented towards the names that probably are up a little bit more than they should be. The rest of the screen is just flat out red. And that NVIDIA, which was up yesterday, and I'll go ahead and take a little bit of a victory lap. I certainly took a lot of shoulder exposure. I will tell you that. So obviously I'm doing okay today. But yeah, so not great, but really wasn't a good quarter. Like I said, it's a multiple situation there. It's not because I think NVIDIA isn't an amazing company. Of course, it's an amazing company. It's just whether or not you want to pay a lot for it in this particular marketplace. Additionally, I want to remind you guys, which is what I said the other day, you got to be really careful because timing is everything. We're about to jump into the fourth quarter, and then we've got Labor Day weekend coming up next week. Let's take a look at what next week looks like. And then I just want to very briefly go through Ulta's earnings, which is very interesting. It was trading up. It should trade up. It was a great quarter. And then I'm going to go through maybe one other quick thing on BABA as follow-up. See if I actually got it all. Yeah, I'm gonna do a little bit of BABA follow-up because I felt bad that I shortchanged, but you had to say, David, yesterday. So here we go. This week's economic data, I do want to talk about because I didn't review GDP yesterday. And also we didn't talk about the PCE index this morning, which came out and actually came out better. So the economic data, for what it's worth, I know everybody thinks that our Fed chairman, I'm a huge fan, as you know, but GDP data did actually go up a little bit more than expected. So they had to revise it up, basically, but we're still negative 2 quarters of GDP. Now, remember that in the FOMC meeting, if you haven't had a chance to read it and you want to read along, then go ahead and check out my video where I talk about what happened in this last FOMC meeting minutes. But I told you then that there was real concern that there might need to be some upward revisions on the GDP numbers. And lo and behold, here we go. It's really just kind of telling you that this economy is really funky, and depending on how you take the numbers, it is what it is. Now, the other thing that came out today is personal income and PCE. Okay, PCE is showing the actual number is personal income increased a touch, which is what we wanted, and PCE started to decrease 0.1%, which is a huge positive as relates to inflation goes. So that's the monthly number. And then we start to look at how it looks on the indices. You are starting to see ex food and energy come down to 4.6, which, by the way, guys, for the record, I know everybody's like 2%, he's crazy, but he wasn't saying 2% this year. In the FOMC meeting minutes, you can see it very clearly. He was saying 2% next year. Okay, next year. This year, he's looking for around 4.5%. Lo and behold, he's almost there. So this is actually probably going to be fine for the next couple of months, which gives the Fed a little bit of wiggle room on what to do and gives the governments that be a little bit of a breather. And this only has to do with the time of year that we're in. We are in a time of year where a bunch of numbers come out. They can be tricked, adjusted, and otherwise manipulated, but are the numbers. And those have to do with food because we're in the middle of harvest season, August. Well, late July technically, but August for the United States is harvest season and it goes through September. And if you're confused on that, just go to the CME website and look at the grain futures and where exactly those contracts sit. And it will become crystal clear what is considered harvest time in the United States of America because our contracts match what harvest time is. So that is what it is, right? Okay, so we get a huge amount of food that comes online because we'll be harvesting it here in the US, and then it'll just have to do a couple things before it gets exported. So there's that. Then the second thing that happens is we have cooler temperatures, knock on wood. We don't have this ridiculous September, but we get cooler temperatures, which takes a little bit of pressure off the energy complex. Now, it's really about how fast will Europe decide that it needs to soak up all of that? Will they take advantage of this seasonality? We don't know. But what we do know is that they could and probably will do that. But, you know, if there's a little bit of an uptick in production, it'll cosmetically look a certain way in the numbers. Because if we think about what was happening September, October, November in the numbers, you actually had a big oil movement, a reasonably large oil movement, September, October, November, before the president attempted to release reserves at the end of November. So just realize that some of that is in there. It's an easier comp, and so on and so forth. So that is reading into, I think, why he's saying what he's saying. And then realize that after we get into January, February, and March, we're in probably the most aggressive points of what happened as relates to agriculture, and also what happened as relates to, because we'll be, you know, the Ukraine wars in that February number. Well, it's really in the March number, if we're honest, but so you do actually roll off of some easier comps, for lack of a better way to say it. This is kind of like retail sales in that regard, inflation, which is the strangest comparison to ever make, but it is legitimately why he's saying that by next year, we're at 2% inflation, and c'est la vie. All right, sorry about that. I got a little extra air today. Okay, let's see. So that is what was going on next week on the economic data front. I think these are not big deals, but this market, when it doesn't have news, will move on pretty much anything it can find, which is strange, but it is what it is. We've got, you know, oh, I apologize. Actually, I should have red flagged this one. We do have consumer confidence coming out, but given that we're just literally seeing PCE, you know, it's not, we're not going to be, you know, the market will move, but we really shouldn't be massively surprised. That is what it is. And then the big thing is that we have month end in August. Okay. So that's month end, quarter end. You're going to see a lot of window dressing and movement, and you're going to see some very strange liquidity happening as a function of the fact that come Friday, you're going to have most of the big bosses taken off on vacation already. So that is what it is for next week. And it does mean that either be in cash or be hedged, or some combination of the both. This morning, I don't know why, I just woke up yesterday. I was already like, you know what, the UVXY, which I hate to trade and sell. I only like to trade. You should never own that thing in any way, shape, or form, because the geographic returns, the way that thing is struck, someone should closely take a look at it. Doesn't matter. Point is that when I saw where it was at and where the VIX was at yesterday, I closed out the book by just basically buying a ton of that VIX. Lucky, knock on wood, there's someone sometimes looking out for me, I feel like, and up above. And then I bought more this morning because I don't want to go into next week in this volatile environment. I'll probably let some of it go since it ran up so aggressively, the VIX, but let's see. But next week, if you're not in, if you can get to cash, get to cash. Don't try to hold too much that you don't feel comfortable with, or hedge it out by selling calls against your long positions, depending on how you're positioned. That is the type of work we do here at Gorilla. So come find us if you have your specific circumstances. And I did want to mention that we do actually have some earnings next week, and they're interesting ones. Catalent is a healthcare company. I don't have a strong view on that right this minute because healthcare was so mixed this quarter. Best Buy, Baidu. The challenge I have with Best Buy is I really like her as a CEO. I think she's wonderful. But nonetheless, one of the challenges of Best Buy is just that they have, you know, they're in a rough space right now. She's done a lot to try to turn that company around, and she's great. And the thing is cheap, but it could go either way. Come Monday, I'll take a look and see what's going on in the options market, but I don't want to do anything to carry over the weekend. Baidu is part of the reason. It's obviously not one that I cover, but it will obviously give insight into China, so I may watch it nonetheless. And for those of you that have positions on Baba, even though they're very different businesses in many regards, doesn't matter, because right now everybody's staring at China trying to get a data point. And that's what's happening there. So we'll all be watching that. Brown-Forman, that's your bourbon maker there. So, one of the last of the beverage companies to report. And then the only other names that I personally have next week would be Campbell's and Hormel. And they're going to be really relevant to me because I care what all of the packaged food companies are doing, because they do excellent macro work. I mean, come on, they do better macro work than the Wall Street does. So I want to have a listen, in particular with Hormel, because they have that livestock. I mean, obviously, what Hormel does. I'm sure y'all been to the grocery store. So I'm going to be listening to what they're seeing as relates to meat prices and any kind of grain insight that might just randomly happen off the both of them. So that's what's up for next week. I do want to mention again, this is where I'm at. I've got 2 more companies and I'm done with my 400, and then I'll just be whatever else I feel like listening to. But for the next 3 days before we get to September, where I restart the count. But essentially, it really is ending something like 54%. We're fine. We're really good and fine. They passed through costs. They got all the earnings to trickle all the way down. These 62 crushed it. We're talking like top line growth well over 20%, or alternatively close to 20%, but bottom line growth like 30-40%, meaning they are expanding margins in this market environment. So there are 62 such companies in the S&P 500 that are 100% crushing it. A lot of them, no joke, no lie, too obvious, are in the energy sector. Obviously my fertilizer companies, but there's a lot of random places here and there where it's amazing. And over the next few weeks, as earnings starts to slow down, some of them I will double down some effort on to explain more clearly to you guys, so you can take a look at them, keep them on your radar screen for the back half of the year. Then there's the pigs down here, puked it out, terrible revenue growth, and on top of it, margin compression, the worst kind of combination of both. And there's a fair number of those. And then there's a bunch where I'm really worried about whether or not, no matter how ugly this quarter is, if it's going to get worse. That's actually where I put NVIDIA, to be fair, because we really do need to see what happens next quarter with NVIDIA, which is why I do have a bit of a short position on today. But sometimes these things can go either way. So I don't want to take a victory lap on a company that I actually kind of have been long most of the time. Ulta Beauty did fantastic. And I just want to I wish I would have taken a position on this, but I was too darn chicken. Now, last week I had mentioned that the Ulta should do fine because of what I was seeing with Estee Lauder. Estee Lauder did not do fine. And the reason they did not do fine is because if you look here, this is the geographic split, which shows it far more clearly. They did not do fine because Europe and Asia are not doing as well as the United States is doing, period, as relates to consumer, as relates to people buying stuff, et cetera, et cetera, et cetera. Ulta doesn't have that exposure. They are primarily, almost entirely in the United States. They may have a little bit going on in Canada and Mexico. They've, stuck their little neck out to try to grow into Latin America a bit, but it's very, very small. Very small, so small. And in fact, I'm not even sure. I think they might have sold off those stores during COVID, but I don't know. I have to double check what's going on in there. But really, it's an American company for the most part, with a little baby bit of exposure every now and again in Canada and Mexico. This was wonderful. Top line increase 16.8%. And it actually came from both mass and non-mass brands, which means all women are buying makeup and, strangely enough, skincare, which is amazing because we did not see skincare do well in literally any other place. So the Walgreens, CVS, they weren't loving the skincare business. Johnson & Johnson's got a skincare business, not so great. Estee Lauder mentioned weakness in the skincare business. So this is strange that Ulta is actually doing well in that particular business. And they went on about it for a bit. So for whatever reason, the only thing I can think of is that they're up against easier comps from last year, given they were just opening up from COVID at that point. Comp store sales looked wonderful, up 14.4%, so that was great. The thing that I thought was the most interesting pull away, which is why I'm bothering to show it today, because I don't usually go through companies this way, is that their pre-opening expenses declined 4.6 million. So what do I mean by this? This is very important to understand. Basically, Ulta, like many other younger growing companies, are going around trying to find real estate to open up stores. And it just so happens that when they did it this time, instead of having an increased expense because of inflation, because of whatever, they were able to get their stores done and, put together the way that they needed to put together. So all the stuff inside the store as well, that you've got to think like cash register, all that stuff. But they were doing it to the tune of 4.6 million less than they typically did on pre-opening expenses. That's a big deal. That's actually a really interesting thing. I don't quite know exactly what to do with it just yet, but realize it does tell you that for some of the younger companies that are trying to figure something out in this marketplace, it is not the worst time to be a business owner. Okay, now I just want to talk a little bit about Alibaba. You guys know I don't cover Alibaba. And I'll tell you, the only reason I watch Alibaba is because I kind of want to know what's going on in China. Because of what Alibaba does, it gives a really good sense of what's going on in China relative to the economic data that I always see coming out. Additionally, as y'all know, I'm a huge fan of Berkshire Hathaway. Berkshire Hathaway definitely owns Alibaba. That's Charlie Munger's baby pick, if you will. Not baby pick. I don't know. That's a Baba. It's kind of funny. That actually means father in Chinese, but whatever. It's a little bit strange. But I watch Alibaba for a couple of different reasons. And so I'm not totally unaware of how it's going. And in fairness, it has not been going that well because China has not been doing the greatest thing. But, you know, so this was the way I encourage everybody to always look at the numbers themselves and learn about it. One of the challenges with Alibaba is because they are a Chinese company. They are not even interested in trying to do a foreign currency translation for you as relates to an investor, because everything is paid in renminbi. That's their state of being, versus an American company. If you got businesses overseas, all that has to be translated, and then you have FX risk in a very particular way. With Baba, what you do, everything is reported in RMB, and then they're so kind as to give you what that looks like in US dollars. And you can kind of see that on an RMB basis, this was their revenue for the last quarter. It was a little bit more or less flat. That's really what we say, okay? And then you can go look at their costs, and there wasn't, it's a little bit of a different animal there, but you know, you kind of saw what it was. And in a lot of ways, it looks a little bit like Amazon, strangely enough, in the sense of how they report and how they did. Now, I want you to notice something that's really interesting about them. This international commerce number is up a touch, a little baby hair, and it actually is a very small percentage of the revenue relative to the in China commerce, okay? Realize too that this Cainiao, this business right here is the logistics business, CAINIAO for the non-Chinese people that is produced Cainiao, okay, all right? So that business is up 6%. But the reason that I'm always like, oh, is Alibaba undervalued? This Cainiao business is actually the most important piece for me long-term on what they're doing, because Baba actually invested heavily in that logistics center in Hong Kong that does allow you to get anything from that airport to 50% of the world's population, if I understood my time when I sat in at the Hong Kong Development Office here in New York. 50% of the world can be reached through that airport in about 5 hours, something like this. That was their vision for what China would be able to do out of that. That's why I keep saying, you know, if they turn on a dime, it will be so fast, it'll rip your head off. Now, on valuation, and you always have to be careful with valuation when it comes to a Chinese company, because there's extra stuff. There's stuff the Chinese government can do, and then there's stuff that maybe just comes out a different way as relates to costs and how as relates to any number of things. But this is what it looks like. And I just want to give you some context here. For the fourth quarter, Baba did 22 billion in sales just off the retail piece. I'm not going to try to compare it to the cloud business, even though in fairness you could. On Amazon, you're closer to just under 100 billion in sales on the retail piece, okay? They're very different businesses in some way, even though they have very comparable components. But you've got Amazon valued, enterprise value to EBITDA at 28 times. You don't have that kind of debt going on in Baba. So you're at 2.5 times. And then on earnings, 95 times. Now realize you got the cloud business. Technically, Baba also has a cloud business. They're just extremely different because one's located in China. Do you know what I mean? But you're still at 11 times versus 95 times. So if you ask me point blank, May, is Baba cheap? Heck yeah, it's cheap. Okay. That's what I keep saying. If you're telling me 4 or 5 years out, 3 years out, even, I can't bet against Baba. And also, I fully understand why Mr. Munger feels the way he feels, and I appreciate it. And he always says it the same way. Some people can bear certain types of risks. I have decided to take this risk. Other people may not feel the same way I feel. You know, and it's true. If you need this money tomorrow, this thing's going to be volatile until many things get resolved in global politics. So as far as going long, Baba, that is a little bit more detail for you. But what I do want to tell you is that one way you could do it, because I kept repeating myself so often, I said, well, May, if you feel that way, there is actually an option strategy that matches the words that you are saying, okay? And that option strategy, strangely enough, is a butterfly. I know you mentioned it. I feel like you prompted me on this, David, the other day, so that the two data points would magically conjoin in my head and I would do this math for you. But there is this beautiful website. You can see it up here. It's called Options Profit Calculator. A lot of people use it because it's really straightforward. The options math is just math, but you don't have to do it because we're in 2022 and there's a ton of these calculators out there. And what you do is you stick in BABA. It'll get you the price, which at the time that I made this for a demo is 101. Obviously, it's trading cheaper now. And then you hit here, lower wing. So at the top, it'll let you choose what it is. You're going to pick butterfly. And then what you do is you pick a lower wing, and that will be basically the long leg, if you will. And it'll let you select. You'll go to Jan 20th, and then you'll just pick the wing. Here, just for demonstration purposes, I'm doing a 120 call, right? Because here's the thing, if you look at the chart and you also realize that at 120, Bob is still massively undervalued at 2 times EBITDA, right? You know what I'm saying, as a joke, you know, then 120 is probably, if we get some resolution and just a little bit of news, this thing smacks all the way up to 125, you know, very, very quickly, because you just have to realize what's been happening over the last year news flow wise and what's actually taking it down. Anyway, so you do that leg, right? And then you can do 130s. These are Jan's, you know, think the thinking being, hey, I think that this will resolve after the November election, which I keep saying, or November confirmation, which I keep saying, right? So January gives you a little more room. So then you do the 130s, right? So your butterfly lower leg is 120. You buy one of those, see one, and then you buy 2 of the 130s. Sorry, you sell 2 of the 130s, and you sell the upper wing at 140. You just pick those, let the computer do the work for you. And you end up with something that might be like $73, so 73 cents, okay? And this is very, very long. This is actually definitely a long expression of BABA. And specifically, it's a long expression of BABA that pays out best if it falls right at 130, with you starting to receive payout at 120, okay? And then if it, as it goes over 130, you lose a little bit of payout, but it really has to cross over 140 before you got any kind of real problem. Okay, so it looks like this. You know, every time it inches over 103, you'll start to be just fine at 70 cents. And if vol collapses, you will also, it should collapse across these in a particular way where you might also lose a little money. So there is a vol trade in this, okay? But provided BABA does actually move back to that 130, and every time it gets closer to that 130, this can pay out 1,000%, because right now it's 73 cents. And once you collect everything here, you could end up with the way the math works, max return on risk is about, maximum return is $926. Okay, so this is another way to play it. It won't require a lot of capital. It's definitely long. You are going to have to bear the vol risk a little bit, but it's not that big of a deal. This can actually, you can have an inverted butterfly. It happens from time to time. It has happened to me. It makes me want to cry when it does, but it's probably not going to invert that much given the nature of this stock. And with that, let me hit the pause button in case that is something interesting. Hello? David, you're so quiet. I can't hear you. Is that my volume issue? David, you're on mute. Oh, he may be seriously on mute. Maybe he's having a really deep converse over there. David, you're on mute. I'll give you another second. I know it's Friday too over there, so you might have like something else going on.
Okay.
Oh, there you go.
Got it. Okay. Oh, wow. That was very interesting. And I just want to congratulate you on the job you do is amazing. And I'm not saying that just because you work with us, but I mean, anybody that's in stocks or even thinks about stocks should be listening to you.
That's really kind. I've had some good calls. I'm always afraid, the market gods.
It's not luck, man. It's not luck.
I mean, I do a lot of work. Fair. I do a lot of work.
You're reading the numbers. The numbers don't lie.
Yeah. They
That
can
being
push
said,
sometimes though. But like,
you made a brilliant call on Nvidia after earnings. It went up
also
short.
Lowe's, by the way, no one wanted to listen to me on Lowe's either. I was like, that was not a good quarter on Lowe's. So Lowe's as well has helped me out this week a lot since I was short both of those.
Okay, so we bought puts on Nvidia.
Great, good.
Would it be wise, since the volatility is high, to short puts against it out of the money?
Are you thinking you want to own more? Are you that because that's
No, no.
obviously
Instead of covering the short put, sell
oh,
puts.
just turn it into a put spread.
Right, right.
Yeah, because you can totally take profits that way. Just make sure it's a strike where you won't have to deal with it again. Do you know what I mean? But
Okay.
yeah, absolutely. Short puts underneath it to create you a put spread. It'll be the world's cheapest put spread because it's already moved towards you so aggressively. And then you basically are collecting your profits early.
And we are shorting volatility, which is always good,
Yes.
right?
Yes,
Okay.
especially if like, depending on where, I mean, depending on where exactly you want to do it. Say you bought the puts to protect your Nvidia position, because I know you've owned that forever. You're not going to sell the whole thing, but say you bought the puts to protect your Nvidia position and you bought whatever was the strike that constituted $1. If you actually go 5 or 10 points down, which you could because it moves so much, you could basically collect that dollar, still be under the price that it's at. And if that thing goes to zero, then you've actually just, collected almost both sides of it.
Right,
Yeah.
exactly. Okay.
Yeah.
Trying to appreciate what you did on Bob, but there's
Butterfly, because your premium is so little on that. And the real thing that we want to happen is for all of this to resolve. The real issue and the real reason I think everybody wants to be in it is because if it resolves 100%, Bob is going to pop like a little, is it a jack-o'-lantern with a little head comes up at the end of the song? You know what I mean? So if that's the case, then a butterfly isn't a bad way to do it. And you can get them fairly tight, like 70 cents on 110s is where it starts to pay really well. Actually, it'll start to move up over 103 at where I was showing the demonstration, but now with it at 99, the numbers are a little bit different. But if you do the 110, 120, 130, or you can do them wider if you want to apply more capital, you probably could get those done at 70 cents. It's not nearly as much capital, and it can pay you a lot if it starts to move back into that 120 range.
And that cost is $70
per contract. Yeah. So it's butterfly 1, 2 in the middle, one in the back. And then I'm just keeping them even. You could be really clever and move them around a bit, but that's on you to do that. That's why I did the options profit calculator. It's always a little,
January of 2023.
I did January 23 to give myself a little time, and I'm not going to do massive size because quite frankly, if I'm wrong, that thing will go completely to zero. Do you know what I mean? Like if it stays under 100, that thing will 100% go to zero over time. But as long as there's a possibility that it's going up, and you've got Baidu next Tuesday. So that is for sure a potential event that could mess up your little butterfly. So you can wait until after that and then set your strikes wherever, or you can be like, no, I think Baidu's actually going to be the first thing to take this up and go ahead and put it down at 70 cents. It's a little bit easier to play around,
What happens at 140?
If it hits 140, you better be out of it at that point because you'll be on the other side of it and you'll be losing money from the two shorts in the middle. It's got to come right, like what you're really betting on. The middle is like the pin. And so if it hits 130, you got to get the hell out of it because that's the best you can do. See what I'm saying? Almost. And then it's just, if it hits 130 at expiration, then that's actually the best you could do. But between now and expiration, as it gets to 130, anytime it comes close to 130, you might as well just get out of that butterfly and wait for the next trade.
Got it. Okay.
Because the theta burn, you know what? All you have to do is experience one of them and it'll start making more sense. I don't know the way to say it, but But let's say the market stays totally stable. And that's one of the beautiful things. Let me just show you this options calculator. One of the other settings that people sometimes don't notice on it that is actually kind of relevant to play around, but I swear with options, sometimes you just have to get clobbered or enjoy a lot of beautifulness off of your perfectly executed trade. You know what I'm saying? Either one will help you understand it. But one of the things that you do have to pay attention to, this is IV change, change in volatility. And as you move that up or down, you'll notice too, your payout also changes. If vol spikes, the butterfly isn't fun because that middle part spikes up more aggressively than the two legs will. And you can kind of see how that goes. So there is that, but nonetheless, it's not, you know, it's volatile. I don't know another way to say it. It can be kind of volatile, but today is a little bit more volatile and for specifically BABA. So you might be okay.
We are also in KWEB, KWEB, which is an ETF for
Oh,
I'm sure it
yeah,
has
whatchamacallit, those, yeah, there's I forget the name of the index provider. They've been in China for a long time.
okay.
Yeah, that's the one to do.
Yeah, it's just not it's not as volatile for people that just want long term.
Oh, that's a good, yeah. I mean, that is a good index provider. They definitely have been there for a very long time. I think is it a mutual fund that just it does passive investment? You know, let me take a look at them because they from time to time I see them on CNBC and I know they've been doing that business for a very long time. So, cool, very cool. I agree. I'll take a look and see if there's not something fun to show for next show. Anything else?
That is it, me. Thank you.
All right. Take care. Bye, everyone.